Hello and welcome back to Dimes to Dreams. So, as you all know, I am a big advocate for investing. I always like to talk about how and why you should be investing in the stock market. But I also get a lot of questions from my friends and family. And they ask me that isn't it risky to invest in the market? I don't know if the market is going to go up tomorrow or go down. So, how do I make money from it? And I came to the realization that a lot of people confuse stock trading and stock investing. So in today's video, I'm going to break down the key differences between these two approaches, trading and investing, and then you can decide for yourself what is best for you. Let's get started. So first, let us talk about trading. Trading is all about short-term moves. So traders, they buy and sell stocks, commodities or currencies with the goal of making quick profits from the price movements. So the trades can last anywhere from a few seconds to a few days and sometimes even a few weeks. But the key focus is always to profit from the volatility and not necessarily the long-term growth of a company. Typically, traders will use something called technical analysis, where they look at charts and patterns to predict the price movements of the stock. So it is more of a hands-on approach, and the goal is to take advantage of small price changes in the market. Investing, on the other hand, is a completely different ballgame. So even though you might be buying the same stocks and assets that a trader is buying, your goal is very different. So investors typically buy stocks and bonds and other assets with the intention of holding them for years or even decades. So the goal here is not to profit from short-term price swings, but to benefit from the long-term growth of the company and the power of compounding returns. An investor will typically hold a stock anywhere between 3 to 5 years all the way up to 25 years or 30 years or even more. There's a famous quote from Warren Buffett, and he said that his favorite time period to hold a stock is forever. So contrary to their trader counterparts, when picking a stock, investors will rely on fundamental analysis. So they look at things like a company's earnings, their management team, and market position to determine whether the stock will grow in value over time or whether it will be a bad choice for holding long term. So the idea is to build your wealth slowly and steadily with investing. So now let's break down the key differences between traders and investors. Number one, time horizon. So traders operate on the short term, often making decisions based on the minute by minute or daily price changes. Investors, however, they take a long-term approach, holding assets for years to benefit from the compounding effect. Number two, risk tolerance. So trading is often considered riskier because it is based on short-term market movements, which is more volatile. Investing has its risks too, but it is spread out over a long period of time, allowing time for market corrections. Number three, strategy. Traders focus on technical analysis and market timing, while investors, they focus on fundamental analysis, looking at the long-term potential of a business. And number four, frequency of transactions. So traders may execute multiple trades in a day, while investors might buy once a month and then hold their assets for months or even years. So now let's talk about some pros and cons. Starting with trading. Pros of trading: quick potential profits. So with the right strategy, traders can make money really fast. And number two, active participation. So if you enjoy being hands-on and following the market closely, trading might be very exciting for you. Cons of trading: high risk because you're relying on short-term price movements, so the risk of losing your money is higher. And number two, time consuming. Since you need to actively watch the markets and analyze the charts and be quick to react to the market movements, it will take up a lot of your time. Now let's look at investing. Pros of investing: long-term wealth building. So by holding the assets over a long period of time, you can take advantage of compounding growth. Number two, less stress because you don't have to watch the market so closely. You don't have to worry about the stock price going down in the next minute or over the next hour. There is much less stress involved with investing. And once you have made a solid investment, you can just set it aside and let it grow over time. Cons of investing: slower growth. A lot of people gravitate towards trading because unlike trading, you won't see immediate gains in investing. It is a long-term game. And number two, it requires patience, which is kind of linked to the first con as well. But sometimes the market may not move in your favor for months or even years, and it takes discipline to stick with your investments for a long period of time. So which is right for you, trading or investing? Well, it depends on your personality, your risk tolerance, and your financial goals. If you like the excitement of watching the markets daily and are willing to take higher risks, then you might prefer trading. But if you're more focused on the slow and steady growth, you don't want to worry about the daily ups and downs, then investing is probably the better option for you. So, can you be both a trader and an investor? Well, yes, you can. So, you don't have to always just pick one. A lot of people choose to have a long term investment portfolio while also setting aside a small amount of money for short term trades. This way, you can benefit from both approaches. So, just be sure that you understand the risks involved with each strategy. And at the end of the day, whether you're a trader or an investor, the key is understanding your strategy and sticking to it. Both approaches can be profitable, but they require a different skill set and level of involvement. Personally, I lean more towards long-term investing, but trading can also be exciting and rewarding if done right. Please keep in mind, I am not a financial advisor, so I encourage you all to do your own research before you get into either trading or investing. So once you have decided whether you want to be a trader or an investor, check out this video to understand what the stock market is and how it works. Thank you for watching Dimes to Dreams. If you found this video helpful, don't forget to hit the subscribe button and bell icon below, and we will see you in the next video. Bye bye.